Hi, and thank you for watching us here at Tax Talk UK, where we talk about all things tax and consider other important aspects of working for yourself, being self-employed, running a small business. So today, as part of our bite-sized series of Xero demonstrations, I'm going to show you how to raise a credit note in your Xero software. Before I do, if I could please ask you to take a moment to subscribe to our YouTube channel. That way you'll easily be able to refer back to this information if you should need to, as well as being able to access other information that we have on a whole host of different topics, all aimed at supporting you in your self-employment. If you navigate to our playlist section of our channel and search for Xero, you will find the other videos that we have available showing you how to use your Xero software. So on then to credit notes. So if we just hop into the software. So here we are in our demo company. So I'm going to show you, as I mentioned, how to raise a credit note. So what you will remember from other videos where we've talked about this is by raising a credit note, we're taking back out some of the invoice from, or all of the invoice, depending on how much the credits from the account. So when we raise our invoice initially, we are adding the sale to our turnover and our sales on our profit and loss. And we are accounting for the VAT if you're VAT registered. And we are also adding the balance to our customer or client's debtor account. So those are the things that happen when we raise the invoice. So what we're trying to achieve by a credit note is to offset all or some of those things. So, for example, you may have issued an invoice in error. So therefore, you may want to make a credit for the full amount of the invoice, therefore completely take the invoice out of the account. Or you may have made a mistake and you want to credit the invoice in full in order that you can re-raise it correctly. Or you may just need to credit part of the invoice. You may have overcharged your customer or have agreed to a partial reduction in the invoice. And so whether you credit the invoice in full and reissue, or you just do a partial credit, if you think through what you're actually achieving, the end result in the accounts is going to be exactly the same. And if you remember, once an invoice has been issued to your customer or client, either electronically or in hard copy, then you can't just delete that invoice or amend any of the key information, such as the date or the figures. It would be necessary to raise a credit. So I'm going to show you how to do this. So the first thing that we need to consider is, as I just explained, we are going to be offsetting some of the transaction that was created from the invoice. So it's important that we use the same categories and the same VAT and customer as the original invoice. So if we just pop here into our invoices, and so let's say this invoice number 45 to Boom FM. I want to have a little look at this. So what our customers phoned, and let's say that we've invoiced them for 3 items and it should have only been 1. So as I explained, we could either raise a credit note completely for all 3 items and then raise a new invoice for 2, or we could simply raise the credit note for 1 invoice. Both are going to have exactly the same end result in the accounts for the VAT and your customer account. So it depends what's preferable. So perhaps if you thought that your customer may not have received an electronic copy yet, and you preferred them to just have the correct amounts, then you might want to credit in full and reissue. Or if they actually alerted you to the overcharge charge, then you could just send them a credit note for the one item. So as I say, it doesn't really matter. It's what works best for your individual circumstances and your relationship with your customer. So I'm just going to make a note of the what I'm looking to credit, because it's important, because as I mentioned before, we're taking the sale back out of the profit and loss. So it's important the category is the same. And it's also important that the VAT code is the same. So for example, if the customer, which in this case they were initially charged with 20% VAT, then it's important that the credit also has 20% VAT. So now that I know the codes that I'm looking to credit, then I can just raise that credit. So there's two ways that we can raise the credit, and I'm going to show you both because different situations will call for the different access points of getting to the point where you're ready to raise the credit note. So if I go back to the invoices section of our Xero software, you will see here I have the option new credit note. So if I raise this, I can fill in the fields exactly the same as when I did the initial invoice. And as with the invoices, the credit note numbering will Xero will do the sequential numbering for you, so you don't need to do anything for that. So I'm going to credit overcharge of one item. So this much as when you raise the invoice, the description is what goes on the invoice for the customer or client to see. It's exactly the same with the credit. You should put enough information on there that obviously you've got a clear audit trail of what has happened. So I'm going to credit one item 54125, and that was to the sales account, and that was 20% VAT. So if I now approve that, you will see that Xero very cleverly is telling me that there is an invoice outstanding for this customer, and do I want to allocate it? So unless you specifically needed to show your customer a statement showing the full invoice and the credit, then this makes it much quicker to be able to allocate the credit to the invoice. So there we go. So that is done. So now if we go back to that invoice, you can see now that the amount awaiting payment has reduced. And that is because the credit has been raised and it has been allocated against the invoice. Now, another way that you could raise the credit notes, particularly if it's relating to a specific invoice, is if you look in your three dots top right of the screen, create and apply credit. So I'm going to just do exactly the same, but you can see here, because we are linking the credit directly to the invoice, it's automatically put all of the information. So the only thing that we need to change here is the date to the same date as the invoice. Assuming that that is the date that we want to use, or we may want to be, it doesn't have to be the same date. It's the date that you agree the credit. So now we just want to credit one item, and it's automatically going to do this for us. So if we approve this, and now if I go back to invoices, we can see that that has reduced again, and the amount has been, the credit has been allocated. So now we've got a nice clear audit trail. We've raised two credit notes against one invoice. Obviously, you would only be doing one credit note, doing it whichever way was appropriate in the circumstances. But now you can see how that works. So hopefully that helps you to understand when you might need to raise a credit, what you're trying to achieve by raising the credit, and how you can raise your credit note in Xero. So thank you very much for watching. Goodbye.